Hello everybody, welcome to our new format of our e-newsletter. Thanks for joining us this week. So we're going to talk a little bit about the economy overall, and then Josh is going to talk about our asset allocation and our portfolios and how those are doing, especially on a relative basis. So we got some key economic data points this week. We got the January inflation report, or the CPI number, and we also got the labor market report for the month of January. Both of them came in better than expected, meaning inflation came in 2.4% year over year, which was lower than expected. And the labor market essentially created twice as many jobs as economists had predicting. The U.S. economy created 130,000 jobs last month, and the unemployment rate dropped to 4.3%. Both of those were better than expected. In fact, the economy added more jobs last month than it has since 2024. When we look at that, I'm sure the Federal Reserve is paying close attention to that. And really, it means that the Fed is probably not going to really do a whole lot as it relates to interest rates, because their monetary policy clearly isn't restrictive. And so I think we're in this sort of Goldilocks scenario for the market, which is certainly good. Market's repricing different parts of the market, and we're benefiting from that, and Josh can talk about that. But ultimately, earnings are the ultimate driver of stock prices, and earnings are certainly good. Remember, the amount of spending from these big tech companies on this AI build-out is going to make it very hard for the U.S. economy to go into a recession. I'm not saying that it's impossible, but the amount of money we're seeing being spent by these big tech companies is like nothing we've ever seen. And so it's hard when that much money is being spent on the U.S. economy to have us dip into a recession. So, of course, there's all these exogenous shots that could come from anywhere and knock us off from where we are. But we're pretty optimistic about the U.S. economy because it's growing quite healthy. Earnings are growing really strongly. So ultimately, those are the drivers of stock prices long term. And then we're really optimistic about our asset allocation relative to what's happening in the overall market.
It's been 25 years since we've seen market dispersion like this. About a fifth of the index, so 100 companies, the S&P 500, are down double digits. But the market is, essentially 1% off of all-time highs. So if you follow the headlines, you've seen specific segments of the market get absolutely slaughtered as artificial intelligence kind of looks for its next target. And like Tyler mentioned, AI, it seems like it's pricking respective bubbles in all of these different little pockets of the market. I found software last week, which has continued a bit this week, but it was in the transports this week. Our usual counsel, of course, to clients is don't get too involved in the day-to-day machinations of the market. And definitely don't hop on account view, whether it's on LPL account view or Schwab Alliance, on a daily basis. But now we want you to, because really the last 3 months have been absolutely spectacular. Those old low volatility blue chip stocks that people wondered why we owned them, well, they're up double digits year to date. International developed continues to massively outperform. Small caps, small cap value, mid caps, all dramatically outperforming the headline index. So when you see various pockets of the market and various individual stocks sell off 40% on one individual earnings report, remember, that's why you don't want to necessarily make big bets on those specific names. But it's absolutely fantastic to see the headline index stay so insulated from these massive sell-offs in particular corners of the market, and we're very happy about where we're situated today.
Yeah, diversification can be very boring at times. It sort of smooths the returns out, but this is the kind of market where diversification matters quite a bit, and it's paying off for you, our clients, and for Josh and I in our own portfolios. As always, if you have questions about your account or your situation, give us a call at the office, 800-743-0988, or email either one of us, Josh or Tyler, at northwestquadrantwealth.com. We'll see you back here in a couple weeks.